Hey, what's up, stock compounders? Brad here. So it is that time again. What are smart value investors buying on Corner of Berkshire and Fairfax this week? Okay, the last 7 days. This is what investors on COBF have disclosed that they've been buying. So we have 13 stocks here and one non-stock. We'll get into that in a little bit. I just want to real quick go through the columns here. We've got market cap. This is the price per share times the number of shares outstanding. Market cap of the company. We got insider ownership. Really important column for me. I like to see over 10% insider ownership. If management isn't willing to own stock in their own company, why should I be willing to? I want to see skin in the game from management. This column here, gurus, how many professional investors own these businesses? Okay. Another really important column, bowling with bumpers. Okay. If we only buy companies that great investors have already bought, it's going to put us ahead of the game rather than venturing out on our own and trying to do all of the analysis ourselves. Bowling with bumpers. VIC, Value Investors Club. So when was the last Value Investors Club write-up done for each of these companies? I like to see something that's within the last 2 years. And it's a great way to get insights into the investment case for a company. So that's VIC. And then, the scores is how I'm sorting these companies. If you're over 10% insider owner, that's a point. If you have at least one guru via Dataroma, that's another point. If you have a VIC write-up within the last 24 months, the last 2 years, you get a third point. So I've sorted these. There's 3 companies that meet all 3 of those check marks. Then you can see 2, 1, and then down here at 0. Now, this next column, Acquirer's Multiple. This is the book that Tobias Carlyle wrote, and it's enterprise value over last 12 months of operating earnings. Okay, so assuming no growth, how quickly could you earn your investment back if you bought the whole business? So that's Acquirer's Multiple. Revenue growth. So this is 10 years. Over the last 10 years, what is the annual rate of revenue growth? That's kind of the growth metric I'm using. This is the cheapness metric that I'm using, the acquirer's multiple. And then this is a new one here. Let me just refresh this feed real quick. 10-year compound annual growth rate. Okay. Now, I'm going to show you where I get that from. So let's just look up JD here. This is ticker terminal, jd.com. So I'm looking at the price chart for JD. Now, I don't have 10 years because it hasn't been public for 10 years. But if I click all, it tells me over the last nearly 7 years, the compound annual growth rate is 21%. So it essentially means if I bought this company 7 years ago, based on the price action of the stock, I would have generated 21% per year on that investment. So that's what this 10-year CAGR is. And if it's not 10 years, I've written how many years it covers, that compound annual growth rate. So I added that metric just for this week's series here. So let's look through the companies, okay? We got JD.com, e-commerce giant in China. Very impressive, 16% insider ownership. I like that. It checks all the boxes. Now, the acquirer's multiple, significantly higher than Alibaba, okay? With a similar revenue growth, a little bit fat, basically the same revenue growth in the upper 40%. But you can see here, this is interesting. over the last 7 years, like I said, that 21% compound annual growth rate for the stock, right? If you compare that to Alibaba, only a 15% compound annual growth rate. And that kind of shows up in the acquirer's multiple, right? Alibaba is cheaper now because, that's an indication that, the stock price hasn't appreciated as fast as it has with JD.com. So those are kind of linked there. Same time frame. The next one, Berkshire Hathaway, the GOAT, right? Greatest of all time, needs no introduction. Again, very impressive insider ownership numbers for how large Berkshire Hathaway is. It's no secret among great investors. Many gurus own Berkshire Hathaway. Pretty recent write-up. This one I've covered before in previous what are great value investors buying this week episodes. So I won't get too heavy into this one. It does, over the last decade, have about a 12% compound annual growth rate for the stock itself. So I thought that was interesting. I'm kind of curious now, what has the market done as a whole over the last 10 years? The S&P 500. So if we look at 10 years, it's basically the same, okay? Just about 12% compound annual growth rate, about the same as Berkshire Hathaway, which is actually somewhat impressive. I think part of that is, a big stake in Apple from Berkshire Hathaway, which over the last, maybe 4 years have really helped the stock price. The performance for Berkshire. Number 3 on the list, Facebook. Again, needs no introduction. Develops products, many products. Obviously, there's just a bunch of apps that are owned by Facebook. So, it's one of the larger ones at the top of the list here. No secret again amongst gurus. Very recent write-up. Pretty cheap for a company with these characteristics. Such a rapid growth company. 23 acquirers multiple with a 46% annual revenue growth over the last 10 years. And if you bought the stock 9 years ago, you've got a 29% CAGR. Okay, on that stock. So very impressive performance. It's basically a 10-bagger in 9 years if you bought the stock 9 years ago. So, I'm a little surprised the acquirer's multiple is so low for Facebook. If you compare it certainly to Amazon, if you compare it to Alibaba, Etsy, any great growth company, Facebook looks pretty cheap. So that's interesting. Definitely had a pop recently. I think the earnings came out yesterday or today, and they were pretty impressive. So, but this number is after the earnings, so it should be factoring that in. Alibaba. Okay, again, we've covered this in about half of these episodes, so I'm not going to go much more into Alibaba. Again, a little bit of a surprise with the 15% CAGR. I would have thought it was a little bit better than that. But again, it's kind of lagged recently. If we look at the price history of Alibaba, we can see over those almost 7 years, pretty strong through around the end of 2020, and then it's had quite a pullback. So, without that pullback, I'm sure it would be doing quite a bit better in terms of the CAGR there. Etsy, number 5 on the list. Again, we've covered this one before. Two-sided online marketplace for artists. Really a global business at this point. 26 billion market cap. Again, I'm really bummed about the low insider ownership. That's really holding me back from digging deeper into this one. Two Gurus acquires multiple 61. Again, pretty frothy in terms of acquirers multiple, but you can't argue with a 48% growth rate over 6 years. And if you had bought the company 6 years ago, I mean, 39% compound annual growth rate. I just want to take a look at. I want to look at the chart here real quick for Etsy. So, yeah, 6 years, 39% CAGR. So it's a 7x in 6 years if you had bought the stock 6 years ago. So, and it's interesting, just crazy growth between. I mean, that was the bottom when the pandemic started, right? March 23rd. And then up through, about 11 months, it was just taken off like a rocket, and now it's come down a little bit. But, Etsy, very impressive performance. It's a little big for me, 26 billion. But, it's something I might still dig into. Again, this insider ownership, it's giving me pause, I'll say. Number 6 on the list, Lumen Technologies. Okay, this one made the news, I think, late last year. Michael Burry, I believe it's one of his larger positions. I want to see how large it is for Michael Burry here. Scion Asset Management is Michael Burry. So it's the 3rd largest position for Scion Asset Management. And there was a pretty big increase in the 4th quarter of 2020, right? 44% add to Lumen for Michael Burry. So, that's interesting. And these top 2 holdings are foreign companies. It looks like they're both maybe out of South Korea. Let's just pop this open real quick. Yeah, South Korea. So, biggest U.S. holding for Michael Burry. Again, disappointing on the insider ownership numbers. Acquires multiple 13. So, that's the lowest on the list. And for a public company, I'd say that's cheap. Anything under 16 is on the cheaper side for acquirers multiple. Revenue growth 11%. I mean, Lumen, it's a bit of a special situation. It's this, what is it? I forget the 2 companies. One is CenturyLink, and then it merged with Level 3 Technologies. Okay, so CenturyLink is this kind of dying behemoth. But then Level 3, you've got this kind of growth company. So it's a weird marriage there. If you want to learn more about Lumen, it was covered on the Investors podcast. I think late last year, and it's about an hour. It's pretty extensive. A very nice coverage of Lumen. If any of you are interested in that one. Next one is the one that's a non-stock. Okay, the only thing I've covered in this series over the last almost 2 months that's not been a stock. Bitcoin. Okay. Leading cryptocurrency with a market cap just shy of 1 trillion, right? The largest cryptocurrency out there right now. So you get the market cap just shy of 1 trillion. There is a guru, Bill Miller, came out, I think recently, said he owns Bitcoin. He thinks, it's not a bubble like it was at the end of 2017 when it went up to 20,000 and then came back down to around 3,000. He doesn't see the same situation now with Bitcoin. I've linked to an article where Bill Miller talks about his thoughts on Bitcoin. Bill Miller, he couldn't buy it for his fund, but he bought it for his own portfolio. He bought around $200 to $300 per Bitcoin. Okay, So he's up like 200x or more on Bitcoin. I was very surprised to see that Bill Miller had bought Bitcoin. I'm curious, what percentage of his personal portfolio was it when he bought it? I'd be fascinated to learn more about that. But now that Bill Miller has come out on Bitcoin, it'll be interesting to see, how many value investors start getting into it as well. So that's Bitcoin. To be honest, I have a small position. It was really something, I didn't mind losing. I see Bitcoin as very speculative. This was in 2018. I put a little bit in, and I haven't looked at it, to be honest. Obviously, it's up a lot, but it's something I'm just going to let ride probably for a decade or so. I don't see it as an investment, is my point here. It's purely speculative. And it's really because I don't know how to value it, okay? It doesn't produce cash into the future, which is how I'm used to valuing businesses. But check out Bill Miller, what he says on it if you're curious to learn more about that. Number 8, Nvidia. Something I never expected to see on Corner of Berkshire and Fairfax. Nvidia has been a high flyer growth company for quite some time now. 382 billion market cap, so quite large. Again, pretty weak on the insider ownership. I think the only write-ups in VIC are short write-ups, so investors who think it's going down. Acquires multiple, the highest on here at 83. Revenue growth 17%. I was surprised that it was so low at 17%. Let's take a quick look at Nvidia. Look at the price action here for Nvidia. So, it's one of those exponential curves with a little wiggle in here, but it's been a 30 bagger over the last 10 years, 41% CAGR. So just incredible performance for Nvidia. And I don't think it's never been cheap enough for most value investors to even touch it. But there are 3 gurus that own it. I want to see who those are real quick, just out of curiosity. We've got, I don't know who this is, Mayors and Power Growth Fund, Meridian, and Lee Ainsley. Okay, I mean, Lee Ainsley has an insignificant stake. So, no recognizable value investors that I follow own Nvidia, but I know it's been a high flyer for quite some time. And a 30 bagger over 10 years, that's pretty ridiculous. Apple has been like a 10 bagger over the last 10 years. So this is definitely the best performer on this list in terms of how you would have done if you'd bought it 10 years ago. Next one, Tremont Mortgage Trust, a REIT focused on originating and investing in first mortgage loans. I believe these are loans for commercial real estate. This isn't my area of expertise, so I'm not going to dig into this one, but super small. I think this could be the smallest company I've seen in this series. 51 million market cap, 21% insider ownership, and again, it's too small for any gurus to touch it. Doesn't even have a write-up in VIC, so really flying under the radar there. So if this is in your wheelhouse at all, in terms of circle of competence, check out Tremont Mortgage Trust. The next one, number 10, Topicus. Okay, this is a recent spin-off from Constellation Software, targeting the European market, the European software platform businesses market. 3 billion market cap. Now, there's nothing disclosed on Dataroma about gurus that own Topicus. But people have sent me screenshots from Bloomberg Terminal that Chuck Aker is buying Topicus. Okay, so don't take that for what it's worth. Take it with a grain of salt. But Topicus is intriguing to me. And if you want to learn more, there's a write-up here from the 10th Man. It's a great write-up, deep dive on Topicus. So, I mean, if Topicus is able to do anything close to what Constellation Software has done, for those of you who aren't familiar, let's just look up what Constellation Software has done in terms of CAGR over the years. So we'll look at all. So just about 15 years, 36% CAGR for Constellation Software, okay? That's a double every 2 years. So incredible performance. I mean, this has been a 100-bagger over the last 15 years, okay? It's really tough to do better than that. That's just ridiculous. So, if the same DNA or if very similar DNA is being passed on to Topicus that was had at Constellation Software, this could really be one to watch. And I know Chris Meyer recently mentioned that he owns Topicus. Of course, he owns Constellation Software, so he would have gotten some shares in Topicus with the spinoff. But my guess is he's been adding to that. But again, that's purely speculative. Again, Chris Meyer is the author of 100 Baggers. So he knows something about hunting for these 100x stocks, which the parent company here, Constellation Software, fits very nicely into that bucket. Number 11 on the list, Cash, Meta Financial Group, offering various banking products and services. Obviously, it's very generic. And again, this isn't my area of expertise. 1.6 billion market cap. A write-up from exactly 2 years ago. So, yeah, a pretty impressive performer, okay? It's been about a 10-bagger over the last 10 years with a 25% CAGR. So, could be one to look at if this is your area of expertise. The next one, number 12, Microsoft. Needs no introduction, 1.9 trillion market cap company. I think it's either the second or third largest company in the U.S., depending on where Amazon is. Let's see. No real insider ownership to speak of. Very popular with the gurus. A bit of a dated write-up. I don't think Microsoft gets cheapen up very often for the value investors that are frequenting Corner of Berkshire and Fairfax. Acquires multiple 29. Okay, so on one hand, it's a lot cheaper than a lot of these other tech giants. But it's also, revenue growth 9%. Okay, it's not a high growth company. At least it hasn't been over the last decade. And at 1.9 trillion market cap, it's hard to see it being a high growth company in the future. 26% CAGR, over the last decade, again, a 10-bagger. So nothing to sneeze at there. Obviously, Microsoft owns LinkedIn, so it's possible they could get some growth out of that, but it's not super compelling to me, to be honest. I've never really liked Microsoft, their business model. So let's look at the last two. Delphi Limited. This is a company out of Singapore, manufactures and distributes chocolate confectionery products. Okay, pretty small, under 500 million market cap. Very fresh write-up from just 2 months ago in VIC. Again, Very reasonably priced at a 13 acquirers multiple. But you guys, the revenue growth, let's look this one up here. P34. Revenue growth isn't the right word. It hasn't been there. So if we look at the financials over the last 10 years, you can see total revenues. I mean, this was an outsized year here. Well, let's go back further. Okay, so we start in 2004. You've got pretty good revenue growth up to 2010. Okay, and then something happens. 2011, it drops like a stone. And then, I mean, it's generally trended about even, maybe a little down since 2011. So revenues, I don't know what to make of those. But you look at the price chart as well. It reflects the revenues. You know, it's down about half, okay? Price has been cut in half over the last 10 years. So that's concerning. I definitely want to understand that. You know, is this a turnaround play? Is there a new CEO, a new management team that, you know, can do something with this company? I'm not sure. But, you know, I don't think I'm going to look any deeper into that one. And then finally, preferred apartment communities, which has showed up, you know, basically every week for the last month, maybe month and a half. Ownership and operation of Class A multifamily properties in the U.S. Again, about a $500 million market cap. But, you know, it's really flying under the radar. Management team doesn't seem super interested in owning stock. No gurus, no VIC write-up. There is a bit of a write-up in Corner of Berkshire and Fairfax. It's got its own thread. So check that out if you're interested in this one. I keep saying I'm going to dig into it. I haven't yet. It's hard to get excited with a 2% insider ownership. It makes me a little nervous. This is one column, the insider ownership column, I really don't want to compromise on. And this would be quite a compromise. So, again, revenue growth, pretty impressive. I think I did this over the last 5 years because it was like 67% over the last 10 years. But if you start with a super small number, it kind of skews the growth numbers. So, and again, if you'd owned this thing for 10 years, you have like a 1% CAGR. All right, so there needs to be some kind of turnaround story with this one. So that's it, guys. These are the 13 stocks plus a bonus cryptocurrency for all you crypto fans this week. Are there any that I'm going to dig deeper into? Not Facebook, not Etsy. Topicus is on my list, and preferred apartment communities. Those are the two that I have some interest in doing a deeper dive on. So anyway, guys, hope you enjoyed this episode. Thanks for watching, and let me know in the comments, as always, if you're buying any of these, if you have any of these on your watch list, or if you just came across them through this video and you're interested, going to do a deeper dive. Always, fun to hear from you guys how these episodes impact you. So I will leave it at that, and I will see you all in the next video. Take care.